A neighbor of mine moved to Portugal 2 years ago. Smart guy, did everything right, got the visa, opened a local bank account, started transferring his savings over from the US. What he did not do was file one form with the US government. Not his tax return, a different form, one that has nothing to do with how much you earn. And the penalty for missing it was up to $16,500 per year he missed it. He had no idea this rule existed. And here's the thing, he is not unusual. I talk to people planning to retire abroad all the time. Most of them have never heard of the FBAR. So today, we are going to fix that. By the end of this video, you will know exactly what FBAR is, whether it applies to you, what the penalties actually look like in 2026, and most importantly, what to do if you are already behind. Because there is an exit ramp, and most people do not know about it either. Let us start with the basics. FBAR stands for Foreign Bank Account Report. The official name is FinCEN Form 114. It is not a tax form. You do not file it with the IRS. You file it separately with a government agency called FinCEN, which stands for Financial Crimes Enforcement Network. The rule is this. If you are a U.S. citizen or permanent resident and the total value of all your foreign financial accounts goes over $10,000 at any point during the year, you have to report it. Not if you earn money abroad, not if you owe taxes, just if the accounts exist and the balance crosses that line. Now here's the part that surprises people the most. It is not $10,000 per account, it is $10,000 in total, across all accounts combined. So let us say you have a checking account in Portugal with $6,000 and a Wise account with $5,000. That is $11,000 combined. You have to file, even though neither account individually hit the threshold. And it gets broader than most people think. The rule covers checking accounts, savings accounts, investment accounts, foreign pensions, and yes, Wise and Revolut count too. If it is a financial account held at a foreign institution, it is on the list. Joint accounts with a non-US spouse are also included. The deadline is April 15th, same day as your tax return, but there is an automatic extension to October 15th, no application needed. And unlike your tax return, you file this one electronically through the FinCEN website, not the IRS. So what happens if you miss it? This is where it gets serious. And this is where I want to walk you through the actual numbers, because most of the content out there buries the lead. There are two categories of violation. The first is non-willful. This means you did not know about the requirement. You were not hiding anything. You just did not know the rule existed. The penalty for non-willful violations can be up to $16,536 per year you missed it. A friend of mine found out about FBAR 3 years after moving to Spain. Non-willful. She had no idea. 3 years times 16,000. That is close to $50,000 in potential penalties for a form she genuinely did not know existed. The second category is willful. This means the IRS believes you knew about the requirement and chose not to file. Willful penalties are the greater of $165,353 or 50% of the account balance at the time of the violation. And willful violations can also mean criminal charges, up to $250,000 in fines and 5 years in prison. Now, I am not saying this to scare you into paralysis. I am saying it so you understand why this matters. One more thing on the penalties. And this is actually good news from a 2023 Supreme Court case called Bittner versus United States. Before this ruling, the IRS tried to charge a separate penalty for every single account you failed to report. If you had 5 accounts and missed 3 years, that could be 15 separate penalties. The Supreme Court said no. Non-willful penalties are per form, not per account. That is a significant protection for people who genuinely did not know, but it does not apply to willful violations. Those are still per account. I want to address something that comes up every time I talk about this. People confuse FBAR with FATCA. They are related, but they are not the same thing. FBAR is filed with FinCEN. It covers foreign financial accounts over $10,000. It is separate from your tax return. FATCA is a different law. Under FATCA, if you live abroad, you file Form 8938 with your regular tax return if your foreign assets exceed $200,000 at year-end or $300,000 at any point in the year. The thresholds are higher. The form goes to the IRS, not FinCEN. Both can apply to the same person, but they are different requirements with different thresholds and different forms. A question I hear constantly: does a WISE account count for FBAR? The answer is yes. WISE is a foreign financial institution. If you hold a balance there and your total across all foreign accounts goes over $10,000, it is included. However, using WISE to transfer money is not itself a reportable event. The FBAR covers account balances, not transactions. Moving $50,000 through WISE does not trigger an FBAR on its own. Holding $50,000 in your WISE balance does. And one more common mistake. People assume that because they do not owe U.S. taxes while living abroad, they do not need to file FBAR. Wrong. FBAR has nothing to do with whether you owe taxes. It is a reporting obligation that exists independently. You can owe $0 in U.S. taxes and still be required to file FBAR. So what do you do if you are listening to this and realizing you have missed a few years? Here is the part most people do not know about. The IRS has a program called the Streamlined Filing Compliance Procedures. It was designed specifically for people who are behind on FBAR because they did not know the rules, not because they were hiding anything. If you live outside the U.S., the program is called Streamlined Foreign Offshore. If you qualify, the penalty is $0, not reduced, $0. You file the overdue FBARs, amend the relevant tax returns, pay any taxes owed plus interest, and certify that your failure was non-willful. If the IRS accepts it, you are clean. If you still live in the U.S., there is a domestic version. The penalty is 5% of your highest aggregate account balance across the years in question, still dramatically less than the standard penalties. The key requirement for both programs: you cannot already be under IRS investigation. Once they come looking, the window closes. My neighbor from Portugal, the one I mentioned at the start, he went through the Streamlined Foreign Offshore program. $0 penalty. He filed the overdue forms, amended his returns, and moved on. But he did not do it alone. He worked with an expat tax professional who knew the program inside and out. Because the application has to be done correctly, a mistake in the certification can turn a non-willful case into a willful one. If this video applies to you, there are two things to do right now. First, if you have foreign accounts and have not been filing FBAR, do not wait. The Streamline program is available now. It may not always be. Second, do not try to navigate this on your own. Expat tax compliance is a specific specialty. Most domestic tax preparers have never filed a streamlined application. I have a link in the description to H&R Block Expat. They specialize in tax returns and compliance for Americans living abroad. FBAR, streamlined applications, Form 8938, all of it. This is what they do. The cost of getting it right is a fraction of the cost of getting it wrong. I also have a free expat retirement cheat sheet in the description. 5 countries, the tax rules for each, what you need to know about Social Security and healthcare before you move. No cost, just your email. Link is below. Next video, your 401k. What happens to your withdrawals when you are living in Portugal or Panama? The tax math is different than you think. I will see you there.